All right. Good morning, everybody. Hope you're all having yourselves a fantastic start to the AM here. A couple things we want to talk about. So first things first, I want to address something about that AMD trade here yesterday because I got a lot of comments from people about this. And honestly, I think you guys are overthinking things a little bit here too much, right? So yesterday on this 10-min breakout, right, we mapped out our trade, right? We identified our perfect risk reward zones and we looked for an entry, right? Okay, off of that 182.32, right? So based off of that technique, this would have given you a 3-to-1 risk reward entry towards your high of day, right? Or towards that sort of 186 target or sort of our next area that we were anticipating price action to. Okay. Yes, there was an opportunity to get a lower entry than that 182.32, but not so low that it would have stopped you out, right? So you need to ask yourself, if you're unhappy with your entry, are you unhappy with the technique, or are you unhappy with the P&L that you generated on that trade, right? If you weren't happy with the 182.32 entry, and you want to look for that flush underneath, then change your technique so that's what you're looking for on each trade, right? But if you're happy to accept a 3-to-1 risk reward ratio, or sorry, a 1-to-3 risk reward ratio on your entry, and then it pulls back 50 cents, and then it still runs and gives you follow through higher, is your entry really that bad, right? Like, did you actually do anything that wrong? Or did it satisfy all the criterias of your rules and give you exactly what you were looking for? Yes, it wasn't perfect, right? Yes, you maybe could have made a few more dollars, but if it satisfies your criteria, it gives you your risk reward, it gives you those opportunities, then you can't like beat yourself up about not getting the exact bottom, right? So too many comments yesterday, too many emails, too many text messages about, oh my gosh, like I hate my entry. I was 50 cents higher than you or whatever it is. But your entry wasn't bad, guys, right? Like don't create these unrealistic expectations for yourself of what you could have done. Did you follow your rules? Yes. Did you get the appropriate risk reward entry for your justification or for your setup? Yes. Okay. Did you get as much follow through as you wanted? No. But is that necessarily because you followed or because you didn't follow your rules, or because you did something different or whatever? No, that's just variance, right? That's just the way the game goes sometimes. And so we can't hold ourselves to these very unrealistic expectations. Now, if you want to gamify your trading further, right, and you want to put yourself in situations where you're consistently trying to lose less, then yeah, that flush technique, right, is absolutely the way to go here, especially if you have more flexibility with your execution timing and you're not relying, or you're not going to get as much bad slippage, right? So if our objective here is always to lose 1% of our accounts than less, well, now I know that anywhere under, right, if I'm sizing my trade for a 1% loss from that 236 fib, then I know, right, that any pullback under means any entry right under that zone means I'm losing less than I anticipated or less than I was planning. And that's a win, right? So if you now want to combine those two techniques, sweet, right? You're ultimately probably going to do a little bit better, but there's now going to be cons to that as well, right? Where you're going to miss trades that directly touch that 236 fib level. So the reminder here this morning, right, is that we can't overreact and like hold ourselves to this like crazy unrealistic standard of getting the perfect entry, perfect technique, perfect timing on every single trade. And if you hold yourself to that standard, then your trading is never going to feel good enough and you're never going to feel like you're actually making progress in your decisions. So really, really important, right, that we ask ourselves, am I happy with my process, or am I unhappy with my P&L, right? And if I'm unhappy in my P&L, would I change something in my process, or should I do something different to be more accountable to myself so I'm pushing myself closer towards that? We systemize our entries so that it's something that we can repeat and is binary, right? Either it hits that 3-to-1 risk reward or it doesn't. We can't quantify that feeling under, right? We can't quantify that breakdown lower. So please, guys, right, don't hold yourselves to that standard. Are you happy with your repeatable technique? Yes or no? If the answer is no, then you got to ask yourself, am I unhappy because my P&L wasn't great enough on that specific trade? And we can't be living and dying with that on a trade-to-trade basis, right? So really, really important we don't lose sight of those things. And we realize, okay, when we map out our things, when we find our entry price, If we're unhappy with that 3-to-1 risk reward, then you need to change your technique to do something that's a little bit different, right? And if you get a trade or an entry that's lower than that 236 fib or that 182.32 area in this context, you're not taking on more risk here, right? You're not adding more position sizing. You're not doing these things. You've sized your trade for that 236 entry, and now you're looking to time it so you can try to gamify losing less. So that's it, right? Like, yeah, too many comments yesterday about people being super unhappy with their entry price when it literally followed every single one of your rules, right? So if it followed every single one of your rules, are you unhappy with your rules or are you unhappy with your P&L, right? So we can't try to be solving for the max P&L on every single trade because ultimately it doesn't lead to anything sustainable, right? So yeah, like I said, we got to be really focusing on those processes, right? Focusing on the variables we can control. We cannot control that feeling under. We can control our technique at our trigger points, right? And if you're not happy with your technique, then take some accountability for it and try new things to make yourself happier with what you're doing, right? And I don't know how many times I've said it here before, but if you're waiting for me to say that I'm in a trade, then you're always going to get a worse price or you're always going to get a different fill and you're always going to feel like I'm cheating you, right? That's the reality because there's latency, there's timing, right? There's going to be different prices that we potentially see sometimes. And so you have to take accountability over that decision and your technique over that moment there, right? So very, very important that we stress those details. We obsess over those techniques and we don't try to overcorrect on each decision, right? If you're happy with your 3-to-1, if you're happy with all those variables, sweet, accept it, move on, and don't try to overcorrect your P&L on a trade-to-trade basis. All right. So with that out of the way, right, good morning, Craig, Greg, Ruben, Suresh, Gary, Gabe, Steven, Igor, Topher, Mike, Vlad, Rusty, Joe, and Greg. Hope you guys all having yourselves a great morning here this AM. And yeah, let's start kind of mapping things out here this morning, right? But guys, we just have to, trading is so much about creating realistic expectations, right? So I stress that because everyone there yesterday who complained about their entry had a great entry based off of their system, right? Based off of the rules that they trade, and that still wasn't good enough. So like it's just an unrealistic standard to hold yourself to. You're never gonna feel like you're happy. You're never gonna be happy with your trading if you have to catch the very lows, if you can't survive any drawdown. And sorry to keep ranting about this, right? But there's 3 ways to judge your entry, right? It's the one that followed my rules, the one that was perfect, and the one that would break my rules, right? So you can't hold it against yourself when you followed your rules and did exactly what you planned, right? Because that still made you money. So yeah, let's not make mountains out of molehills and try to overcorrect, right, for things that were to the T, to your system, to whatever it needed to have been. All right, so I had a little bit of economic data come out here this morning, right? Nothing too crazy. PCE fine, came in fine. We got pending home sales here today at 10. So that'll definitely be a little bit of a market mover here. But we're not really seeing too much reaction from the indexes. Yesterday, inside bar there on decreasing volume. And that's quite the narrative essentially that we saw there across the board. We saw a lot of indecision or a lack of trending price action, right? And without that trending PA or without that clear indication of momentum, slows us down, right? It forces us to make sure that we're seeing those volume standards. We got to make sure that we're not running into narratives that are just exciting, but not actually perfect. So really important here today, right? We've had a strong week. Not to now feel like we need to compromise something and ruin our PA or ruin the vibe we created for ourselves, right? Or create extra stress for ourselves, right, over the weekend. Focus on the variables we can control, right? Systemize these decisions. Remove that like kind of stress from your decision-making process. And then hopefully we can get ourselves a nice win here to end the week. For those of you who are going to be trading options, right, buy yourself some time. Don't be trading dailies here today or weekly expirations that expire here this afternoon. Buy yourself time. Make life easy for yourself. And yeah, let's just create margin for error in our decision-making process, right? So SPY, we're going to call this inside bar. So now if we're looking for an inside bar breakout, right, we'll call it at 489 area. Same spot like we looked at there yesterday. But what would maybe be the volume standard that we need to overcome? So if we're saying yesterday was a day of consolidation, we consolidated essentially inside a bearish candle, right? A bearish candle on increasing volume, right? So if we're going to be saying that we're consolidating inside potentially bearish price action, what would we need to see to get a bullish narrative for us to be to get continuation? Yeah, bigger than Wednesday, biggest of the week. It's the same thing in this context. So yeah, spot on. If I can get that kind of volume standard, then I could invalidate essentially that selling pressure that was established there, and then hopefully set up a new high watermark essentially of momentum for the week. So spot on, guys. And we'll just keep that the same, right? That's not gonna have to change. Okay, Apple. How do we feel about this? What would we say this candle looks like? Yeah, I would say this probably looks a bit more like a doji than normal body bearish. Kind of feels like the wicks are about the same size as the body as the candle. So I think for me, right, this is kind of telling me high volume indecision. So I think kind of like Suresh is saying, right, lower low, lower high. So we've got bearish characteristics there. Maybe we could argue that this is starting to form a bit of a bull flag. Right, something like that, but you ideally want to see another point of contact before that's established. So this looks like one to watch versus one to trade here today, at least for me. Okay, Tesla. Big gap up relative, opening up middle of the range after a high volume day. Is that volume there expected? Like, would we realistically ever expect to get bigger volume than that here today? Hey, Brian, how you doing? Yeah, right? Like, that's kind of, we can explain that volume narrative. So realistically, we probably aren't going to get bigger than that here today. But we're also opening up in the middle of that range, right? So middle of that range after a high volume day, it kind of screams traditional catch your breath, right? Consolidation day. Don't do anything stupid. So I think this continues to be one to watch versus one to trade. If we can now see like a little fake out and then that BB reversal set up again on Monday, maybe this could be in play then. Okay. Microsoft, how do we feel about this? Higher high, higher low, right? Probably a doji candle. What's kind of a concern we'd say about this candle? What could it not hold? Yeah, couldn't hold all-time highs, right? So definitely a little bit of a concern, not a huge sign of momentum from this kind of price action, but it doesn't mean that it's bullish narrative over, right? We haven't really lost support. We still have, like Greg is saying, right, we've got higher highs, so there is still some indication here of momentum, but it's not great, right? If we saw kind of a little bit of a weak bulls there on Wednesday, then kind of weak volume bulls there on Thursday, probably telling me it's trying to catch its breath here a little bit, or that the breakout scenario is maybe a little bit extended. And then the daily Bollinger Bands kind of tell us that same thing, right? Like those jaws are wide open. Like it's time for that potential compression event here maybe. So I would not be surprised to see either a pullback, right? Maybe a retest of this 400 area, something along those lines. Maybe a consolidation off of that before making those next legs. So the longer it can hold above this 400 zone here, probably the stronger this will ultimately be. But I'd like to see some nice oomph from Microsoft, or like by oomph, I mean volume, right? I'd like to see some strong enthusiasm, strong momentum, whatever you want to call it, showing up before I'm willing to do anything here very aggressive. So probably again, more one to watch versus one to trade here so far today, with really the only tradable opportunity so far looking to be on the index level. Okay, Meta. Lower low, lower high. Right, second most bullish, opening up middle of that candle's range. So what's the sort of most likely outcome here? Yeah, most likely outcome here, probably an inside bar, right? Or like a little failed breakout, little failed breakdown. Because that's the evidence we've seen here last 2 days, right? Failed breakout on Wednesday, failed breakdown on Thursday. Now opening up in essentially the middle of that range. So I would say probably most likely, right? One to watch versus one to trade. Okay, Amazon giving us a possible ascending wedge breakout here, pushing that 159 area, looking sharp. So what would we need to see to confirm that this pattern is actually in play? Yeah, and what would we call strong here, Joel? What would be the narrative, or what would we need to see conviction-wise? Yeah, well, I would still say bigger than the 19th would have to be the narrative for me, because we're looking for a breakout of consolidation. So if that 19th volume standard wasn't enough to create trending PA and we still remain stuck, well, I'd like to see a breakout through that area to give me some conviction. So for me, not too much is really going to change here, but I do think that this is actually finally a tradable opportunity. So today's watch list so far, right? SPY and Amazon. All right. AMD, how do you feel about this? What's this telling us? Yeah, it's a 3 for 3 here to the downside, right? On bigger volume than the breakout candle that we saw there yesterday. So what's the most likely outcome here? Or if we're bulls, what do we probably now need to see before that next leg? No. So with a 3 out of 3 to the downside here, VLAD, right? We're being told that we've got trending conditions here to the downside. So that for me is telling me that I don't really have a dip buy scenario, or that I really have a bullish scenario. There'll be a few exceptions there, right? Like a post earnings one, something like that. Every now and then you'll be able to trade. But for me, no, right? This is telling me that I now probably need to see some sort of consolidation, some sort of reclaiming control event from bulls. I need to recreate trending price action or reestablish a bullish trend in the short term. So this is probably one to watch again versus one to trade, where maybe I could get like a bounce off of a trend line or something like that, but no indication that I have bullish control. So no reason to look for a dip buy. Okay. NVIDIA, what's the story here? What's different between NVIDIA and AMD? Let's start there. Yeah, it's an inside bar, right? So hanging out, continuing to consolidate, a little bit further away from earnings too, which I think is a positive. And we have trending price action here. Now, it's not the greatest trend, right? Yesterday, 3 for 3 to the upside, but not a great 3 for 3, right? It was a weak 3 for 3. So we would anticipate a little bit trending PA. Now, we have a little bit of evidence of buyers bouncing essentially off of that 600 area, or we'd be looking for a breakout through 630. Now, realistically, right, move that's $18 away. It's not one that I'm going to be super interested in for a breakout, because it's probably going to be a little bit exhausted by the time it climbs up, right? By the time it moves 3%. Whereas if we now sell off 2%, right, or yeah, 2% get down to 600, well, that would be an opportunity to maybe get that exhaustion from bears and bounce off of that psych level. So this for me sets up better as a dip buy, because we haven't invalidated the trending price action that we think we've potentially set up here recently. So this is going to be a high vol dip buy setup, or right, like a BB reversal type move. Right, so like a 5-min BB reversal, 10-min BB reversal. If we can get a deeper pullback, then those will be the narratives that would be a little bit interesting. If we can get that 630 breakout, sure. But I'm not going to be very aggressive here. All right. Make sense? Perfect. All right, let's go to Netflix here. What's the count? Yeah, 2 out of 3, and it's a 2 out of 3 without what? Yeah, there's no volume, right? So obviously that's a tough volume standard for us to have overcome post earnings. So same thing like that Tesla, we were never going to get bigger volume yesterday, right? That was never going to be in play, or you need some sort of crazy event for that to have occurred. So what would be the standard that we need to overcome here? Right? Negative earnings, but huge move, right? So you never know how it's going to go. Yeah, spot on, Joel. So we're looking for a breakout through 564 on bigger volume than yesterday. Just show me momentum, right? Based on what we've seen here this morning from the market, right? Like the setups that we've seen, just like as a general feel for where things are at. What do we feel the probability is of this being a mega volume day? If we were to put it as a percentage, how would we feel? Yeah, I would say look like maybe 10 to 15% likelihood. That'd be my guess. How could we potentially evaluate how busy Fridays are recently? So last Friday, right? OPEX. Previous Friday, not that much action. Friday prior to that, right? Kind of a doji. Friday prior to that, a little bit of a dip by day, right? Friday prior to that, doji, right? Friday prior to that, right? Doji. So we've got a lot of evidence of Fridays not necessarily being the most enthusiastic days here recently. Maybe like a premium crush day, whatever you want to call it. So, we got to be very careful that we don't get trapped chasing an outlier in what's a little bit of a slower market, right? So need to have very strict standards here for the volume that we're willing to accept. And then from there, okay, it'll be smooth. Okay, Coinbase, still no, but doing better. Maybe have an opportunity for this pattern or trend line breakout here at some point next week. Probably looking at a 132 at this point. Okay, Google, what's unique here? Okay, right, so that 152.03, right, is previous all-time highs. So we've broken out through all-time highs on decent volume, not great volume, but decent. Normal body bullish, fine. A little bit of resistance at 155, fine. But we're still gapping, down, but we're still holding previous all-time highs, which I think is pretty optimistic. So we have a 2 out of 3 with volume. What are the 2 types of setups that we could look for based off of those conditions? Yeah, dips and breakouts, right? Dips and breakouts, spot on. So if we just argued there that it's bullish, that previous all-time highs held, where would be the starting point for us to look for dip buys? Yeah, we like to see probably that previous all-time high hold, maybe down towards that 150, but don't want to see it probably crack too much lower than that previous all-time highs. Right? So then we're looking for an all-time highs breakout or a dip buy off of like 152 to 150. Okay, sweet. And then if we're targeting a dip buy off of 152, what would be our profit targets here? Oh, no worries. We can translate that in a sec. I'm honestly, it'll essentially be the same setup regardless. I just don't know which ones is available to people. So Goog is just the first one on my watch list. I think FTMO has Google, Surge has Goog, or not Surge, sorry, Lark has Google, or Goog, or what might be the other way around, but it's the same setup regardless. So if we're looking for a dip buy, right, off of 152 to 150 area, which ones are we going? Let's assume it's not a Bollinger Band touch. So if we get a pullback here down towards 152, what would be first profit target? Well, we'd want to target today's high, right? This morning's high. So if we get a pullback, right, from say 153 down towards 150, that'll be our first area of resistance, right? Because that's where we've seen sellers step in essentially before. Once we then get that move through today's high a day, you could look for a breakout towards 155 or 154.76, whatever the high a day was, right? So if we get a pullback, our first target is always current day high, and then we can go from wherever, right? Unless it's like an immediate pullback, right? If it's like we opened up off of 152, fine. But this morning we're going to get a sell-off into that area if we get that trade. So that would be our first area of perceived resistance. All right, a couple minutes here until market open. Do you guys have any questions, anything you want to go over, anything that's catching your eye? Like I said, a minute to go here to market open. So I'm going to step away very quickly, make myself a cup of coffee, and you'll be back out of here in a second. Okay, so as my machine is going here, let's see how the market behaves right at market open. Like I said, guys, right? We need to see volume step in here with some enthusiasm today. Otherwise, just price action is not going to be very interesting. Been a strong week, so today's objective, right, is to basically not ruin the week and to make sure that I don't have a grumpy Friday. The weather is ugly enough for my personality, so I can't let my personality get in the way here today. All right, so there goes Netflix and Amazon. Not bad. But we need pretty big here, right? So we'll see. Netflix again, right? I'm not sure if we're on pace here. So we could have a potential BB reversal setup here. Target would be midline, right? Just like 615. So there's a lot of space. But we need to now make sure that this is actually high volume, right? So if this was yesterday's standard at open, we need to make sure that we're at least significantly greater than that. Now, at least significantly is a little bit of an oxymoron. But let's make sure that we do see oomph here, right? Yeah, I swear, that first sip of coffee just feels like crack. Oh. Okay. So probably not going to get the volume standard we need on NVIDIA. SPY looking. Amazon's got some work to do, but maybe this could be in play. Okay, better, but Amazon's got to be at least right that opening standard, right? So, yes, it's bigger than yesterday's close, but it's not really approaching that, like, oomph stage, right? So we'll pass that on, 10-minute time frame likely here. NVIDIA, not enough volume, right? If yesterday was an inside bar on decreasing volume, and today we're opening 5 minutes is less than yesterday's open, well, it's hard for us to say that we're on pace for building enthusiasm, right? Hard to say that that's really the reality here. So yes, you could take this in theory, Yes, okay, you're getting it to satisfy your criteria on paper, but it's not perfect, right? It's a compromise. It's a B plus version of our setup. So that for me is a reason to avoid it. So I'm going to sit and wait here. 10 min's going to be the path forward for now. Oh my gosh, it's so gross outside. Let's take a look at Visa. Big earnings. Wow, big earnings. Yeah, I mean, you have a Bollinger Band set up for sure, but I just think probabilities wise, like this opening candle, it kind of makes it impossible to get a pullback towards your midline, right? Or get like a pullback that you trust. Like if this thing now sells off $5, probably wouldn't feel great about it, right? Well, maybe your entry, but not my entry. This for me is not giving me the volume standard that I want to say that I have confirmation. So I'm passing on this, right? I wanted bigger than what I saw at yesterday's open. I did not get that. So for me, don't see this as a tradable opportunity. Right? My biggest fear here today, Jamin, is that we don't have enough volume to sustain a lot more bullish momentum. That's my biggest concern, right? So we've got price action that's relatively extended. We've seen big moves here happen from this breakout. So it does feel like to a certain extent that maybe the path of least resistance is a catch your breath day, right? It's like, I don't know how many of you guys can relate, but it's like sometimes, you know, yeah, you might have the energy to run uphill, but if you just like walk it instead, you'll actually be faster in the long run. It's like kind of like maybe one of those scenarios here today. Yes, like you could be in an entry spot here, right, in theory. But I think the market is telling you indecision so far, right? And I'm not sure if we're being told that we have that trending PA. So this just feels, and maybe this is a little bit nervous Nelly, right? But it feels like today is a day where I'm just going to get rug pulled. I'm going to get in a trade. It's going to stop me out, and then it's going to run. And I'm going to feel like an idiot. It's my biggest fear here today. It's been a nice week. Made some mistakes, corrected them, been green on all of them. And yet now I feel like I'm going to get tricked. I really don't feel like I've missed out on anything here yet. How about you guys? Yeah, it doesn't look like there's too much going on. It's okay, I'm having my coffee, I'm hanging out. But pretty muted opening 15 minutes. So I would say that's probably reason to not be pushing. It pulled back? Whoa. That's surprising. To be honest, I'm surprised it pulled. Nah, I'm not sure if this candle, like that, doesn't feel super great as a visual. But here's exactly, I mean, we talked about this a little bit in my early morning rant and rave. But a good example, right? If your entry technique is buy that 236 fib, no questions asked, sweet. If your objective is to gamify getting that entry and trying to lose less, well, you're probably not in that trade here, and maybe you bought yourself some time. But there's pros and cons to all those decisions. You just have to choose which technique you're willing to rely on, right? And which one gives you an edge. Like if you're trading with a funded account and you know that one of the biggest cons with trading with a funded account is that potentially you deal with some worse slippage, well, you probably don't want to be chasing prices, right? You want to be more specific. If you're maybe trading a personal account and you're trading an Apple or a Tesla or something like that, and you know the liquidity's there, well, you could essentially trade market orders with like 5 cents of slippage, right? So just know your product, know the personality of what you're trading, and decide the technique that works best to suit those conditions. Right? Market orders on something that has like a 90-cent spread, it's going to crush you. But, you know, do it in a limit order, or, yeah, we've talked about this before, but there's the technique that I like to use on my limit orders is set that 236 fib as my ideal entry price, right? And then once I see price go under, click submit. And it'll give me or be willing to sell me any price less than or at 266.95. So it essentially becomes a market order with a capped limit, right? So you could always do something like that. But, you know, it's the idea here, guys, is that like our execution technique is kind of intimate, right? Like, because it's ultimately we're the ones who make that decision. We're the ones who have to deal with like the noises in our heads over how we're going to actually execute those. Like it's very unique to us. There's no one else there who's telling us to buy, telling us to sell. There's no one forcing that decision on us, right? So the more accountability that we can take for that process, the more confident you're going to feel in your execution timing. Because waiting for someone to tell you to enter, or that they've entered, or that this is whatever that they're going to do, it's always going to make you feel a little bit uncomfortable because you're only getting the end product, right? You're not answering that why for yourself there. Whereas if you're choosing that technique yourself, you're answering that why. And I think that removes a lot of that anxiety in people's trading because it creates another layer of accountability and something that you can explain. It's easier to explain why you took a trade for yourself, right? Versus why I took a trade. It's the same way for me, right? It's easier for me to explain why I took a trade versus looking at Joel's or Nate's or Brian's or Greg's and explaining why they took a trade, right? So that's always the same reality. And I'm a big believer, and I will say this, I've said this many times, that my trading got better when I took more accountability for those decisions. For just every little faucet, right? For every little detail, for every little whatever element could be. The more I took accountability, or the more accountable I was for those decisions, it was like I finally started to see things for the first time. It's kind of what it felt like. So, I know, a bit ranty and ravey here this morning. I don't know what side of the bed I woke up on. But, yeah. That's I think it's just really important to stress those details. Sorry, looking at this NVIDIA chart just made me laugh there. Think that was a good suspicion. Probably would have had my stop loss at 607, but I feel like that's coming here in a second. So good decision so far. Watch it coming, right? I'm not in, like I said, guys, I'm not interested in this trade. It didn't give me the actual strength I needed it to see. So it looked like a trap from bulls. Right, that's what that told me. So this stop out here would not be surprising. Obviously, I'm not in this trade, right? But it's not surprising to see these lows not hold, right? There it goes. So good decision here so far. We've only made decisions that have saved us money, not cost us money. So ultimately, I can't really complain about that. Obviously, I would have liked to have been in a mega trade here so far, but not the opportunity I've gotten here so far this morning. So no rush for me so far this morning. So how does everyone feel about their trading here this week? Anything that stood out as like egregious? Anything that you think went well? Think that you want to improve? Things that you want to focus on? If you were to summarize your week, how would you say it went? So not too much going on for me here, guys. So I don't think I'll be trading much. Or at all, probably at this point now. I'm not seeing anywhere near the volume I would need to see to be interested. Um, Honestly, I think the market will care about who wins the presidency in headlines only, right? Everyone was talking about, oh, it's going to be this huge shitty market under Biden, but we're at all-time highs, right? So the market's going to do what it's going to do. I'm sure there's some sort of evidence that suggests that markets perform better in Republican presidencies than Democratic presidencies. But like I wouldn't say that it's a huge change. And I think if the market wants to climb more aggressively, then the move would be to essentially get a better form of leverage, right? So then you could go back to options potentially if everything keeps going straight line. You could trade maybe more aggressively. There'll be like technique changes you could do to take advantage of that. But I think from like an opportunities perspective, that remains pretty constant. Honestly, I've been pretty happy with the amount of action I've been getting since like American Thanksgiving. Dude, I sometimes miss COVID. Fuck, I wish I still had that excuse. Good, Greg, good. It's the way it should be. I mean, I do and I don't, but yeah, I'm very happy with. Well, I don't know if I'm happy, but pandemic forced you to go all in on things, right? And it was easy to make some good decisions, easy to make some bad decisions, and I'm very glad I started not only DTR but took my trading more seriously. Forced me to. And oh my gosh, I don't know if Jason's in here, but he'll remember how repressive the lockdowns were here in Quebec. It curfew for ages. Still not enough volume though, right? So we needed to see bigger momentum than what we saw there yesterday. We have not established that standard here yet, right? This is the sore thumb. We haven't gone bigger than that. So yeah, guys, I'm hanging out. I don't anticipate I'll be placing any trades here today. So if you have any questions, happy to fire through them. Happy to answer them as needed. But otherwise, I'm probably gonna, thinking about taking the dog out for a walk here, playing the snow a little bit. Start the weekend maybe a little bit early, but happy to answer any questions if you guys have any. But yeah, I don't think I'll be sticking around for too long here this morning. Sounds good, Nate. You have yourself a great week, man. We'll see you on Monday. So yeah, not much going on here, guys. Not much going on. I'm yeah, browsing away. I don't know if you guys have any questions, anything you want to go over. Happy to answer those things here now. Hopefully you guys have been enjoying the trading journal as well. I'm not sure if you guys have seen, or I'm sure you probably have, inside the DTR daily debrief, the very top, the pinned post. Or maybe it's not pinned. I'll pin that. Oh, no, it is. Okay. There's a P&L tracking sheet here. Looks like this. So this should have all the trade replays of all the trades, the pre-market conditions, the types of trade that it was, my position sizing, P&L, and then like any comments that I might have about the specific trade. So my goal is to always have this updated day of or the next day, but this should be available to everyone here. This has all my trades. And if I haven't done a specific edit, usually it's because the video didn't process in time for me to do it. So I have linked it to the start of each trade in the YouTube videos. So yeah, if you guys have any questions, please feel free to take a look there. And I'll try to update that as often as I can. Yeah, if there's other information that you guys want tracked in that, please let me know. And I'll be happy to include that. Yeah, Craig, if you go inside the DTR daily debrief, it's inside the pinned message. So my max position sizing, VLAD, is about 5,000 shares. And my max post size would be based on the dollar stop loss amount, not the risk reward, right? So if I get 3-to-1 risk reward, that doesn't mean I'm going full position size. I go full position size when my stop loss is less than $1. Right? Every trade I take has 3-to-1 risk reward or greater. Right? So every trade is 3-to-1, but I could go 3-to-1 with half size, full size, 2/3 size. Generally, I try to go 2/3 or full. I don't like going half size trades. Any questions here, guys? Any questions? Sounds good, Greg. We'll see you on Monday, man. Enjoy. All right, guys. Final call for questions here. Final call for questions. You too, V-Lad. Have a great weekend, man. You too, Ruben. Have a great weekend, man. All right, guys. Well, no further questions, and I'm going to kill the stream here for the day, right? Same deal like always. If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as possible. But no trending PA out there for me here today, so no reason for me to risk any more of my own dollars. Been a strong week here, right? Only winning trades, and we're stacking up some nice wins here slowly but surely. So congratulations, everyone, for a fantastic week. And like I mentioned, right? Same deal like always. We'll be back at it again here on Monday for that next pre-market prep at 8:50. So have yourselves all a good one, and we'll talk then. Peace.